Taking futures lower this morning, wholesale inflation hotter than expected. The headline, a month-over-month figure, rose by 0.9%, above economists' expectations of a 0.2% gain. On a year-over-year basis, it was up 3.3%, almost a full percentage point above the 2.5% economists expected. Of course, we'll continue to cover that and see how that does impact the Fed's path forward for interest rates. And to talk more about the markets, IPO action, what we can expect in the days and weeks ahead, I do want to bring in our first guest, Tom Lee. He's a CIO at Fundstrat Capital. Tom, it's great to have you on the show this morning. It was quite the day at the exchange yesterday. Bullish ripping in its IPO. We've got another IPO this morning. What does this signal to you about the strength of the equity market?
Well, I think it's healthy because, as you know, stocks have actually done well the last 3 years, but there has been a dearth of IPOs and new stocks for investors to buy. And actually, I think the universe of stocks has been shrinking. So it's a good thing, actually.
Yeah, I am curious to get your take on what the inflation data this morning might mean for the Fed's path forward and what that could mean for investors.
Investors care both about CPI and PPI, and I think when you kind of compare them side by side, the message from CPI, which is probably where the Fed's going to take more of its cues from, is that the pressures of inflation are showing up, but they're far more muted. And at the end of the day, I think it's pretty well expected from investors that we should see some impact from tariffs, but the trajectory so far has been far more muted, and I think that's maybe the bigger message.
Tom, we are going to go over to the boardroom where MIAX is giving some executive remarks. We'll get back to you in just a moment. I do want to bring back in Tom Lee. He's CIO at Fundstrat Capital. And Tom, we were just listening, of course, to remarks from an executive taking another company public today. A big picture. What is your view on the path forward for stocks right now?
I think the outlook for stocks is actually pretty good. Between now and year end, the economy is not only stable, but maybe even improving in terms of manufacturing resilience. I think we're getting through the worst of these tariff uncertainties, including the CPI and PPI reports. And I think the Fed is going to be in a position to think about 2026 and potential rate cuts. And I think valuations, while they're not as cheap as they were, 5 years ago, I think they're still reasonable considering that companies are producing visible earnings growth. So I think stocks should do well between now and year end.
Tom, I hope you'll be able to join us someday in person here at the New York Stock Exchange. We remember your opening bell not too long ago. It was great to speak to you on the floor. And again, we hope to see you soon. That's Tom Lee. He's the CIO at Fundstrat Capital.